So thank you for joining everyone. So we are JMC vLearning, JMC Virtual Learning Platform. We are the premium uh, premium learning provider on an online basis for the professional courses such as AAT Chartered, ZMA, this and that, right? And for the AAT examination, JMC Virtual Learning Platform has decided to conduct this special seminar series targeting the upcoming exams in the month of February. I'll be doing kind of like 2 sessions, right? And I'll be doing AAT1 financial accounting. Plus for AAT3 as well, I'll be doing on the next couple of weeks, right? So basically, this will be a model paper, or in other words, a guest paper. So my sincere thank goes to JMC Virtual Learning team for organizing this seminar series and inviting me to do the first seminar. And JMC Virtual Learning Platform is going to be a great help for you. Those who are studying AAT and those who are doing AAT1, if you're going to AAT2 and 3, so at your home, you can leisurely study by watching high quality videos done by great lecturers in the JMC Virtual Learning, right? So, right, let's start, right? Okay, so let me give you a very brief introduction about myself. I'm Sandeepa Jayasekara, and I myself is a chartered accountant as well as uh, an ACC accountant and a CIMA accountant, CMA accountant, and AAT accountant. And I got graduated in University of Sri Lanka, the accountancy department, where I became the batch top. And currently, I work as the chief executive officer of JMC, right? So that is basically about myself, right? So we are going to move on to the paper. And I believe if you all don't have the paper, I think our admins will put the WhatsApp group link. From that link, you can download the paper, right? If you don't have the paper, just put a message to the JMC admin. They will share you the WhatsApp group link. From that link, you can download the paper, right? We are going to start the paper. Don't worry, we will guide you through, right? Not to worry. And this is the guest paper I have prepared, right? And this entire paper I designed, I have looked at the past papers, the patterns, and everything together. I have created this paper. And mark my words, this type of a paper you are going to get. If you can master this paper, you are going to get definite A pass, because I have analyzed 12 papers in AAT. So the past 12 papers I have analyzed, I have looked at the pattern, and I have identified what are the areas that can be tested in this February exam. And based on that, I have created this paper. So if someone can master this, definitely yes, you are going to get an A pass. Plus, on the other side, I have put this paper to a little, certain difficult questions even I have incorporated, I have included with the hope and mind that, if we can do some little bit of a tough question, when the real exam is little easier, you will be feel much of confident, right? So we'll start. Okay, you know the basic instructions, and whenever, if you have any concern or whatever, you can always drop me a message, or you can actually, you can unmute yourself and ask even. That is also permitted, right? Okay, so basically in the exam, yeah, you have 3 hours, right? Okay, number of pages we skip. All the questions you should answer. There are 6 questions altogether. Answer should be in one language, right? Answer should be one language in the booklet provided. You need to submit all the workings and calculations. And this one is important. You can use the non-programmable calculators. What we say is this Casio calculators. That is what we generally use, right? So you can use those calculators. Now you have to take a calculator to the exam, right? Some people I have seen that most of the time they used to do this calculation using their mobile phone, right? Don't do that. You have 1 month, get yourself a calculator. If you don't have one, either take it from whoever, your brother or sister or whatever, right? And you have to take that calculator. And let me give you another hint. I used to take 2 calculators for the exam because of an incident that happened to me. When I was doing an exam, I generally take 2 calculators for the safe side. And not to me, but one of my friend who was nearby, high time at the accounting paper, his calculator, his battery gone dead and he couldn't do anything. And luckily I had another calculator, and with the approval of the invigilator, I gave him, right? So sometimes there can be situations. So, for the exam day, at least you need to have like 2 calculators, but other than that, you need to have your own calculator, right? Action verb checklist and this and that are there. For your level, action verbs are very limited, right? They are not going to test on the difficult terms like recommending, evaluating, those type of are not tested. Basically, it's about calculations, defining. So pretty much easy. The action verbs at AAT 1 level, right? Okay. And you got section A. Section A is about the OTQs, right? And under the OTQs, you got altogether 20 questions, and you are going to get 40 marks, right? Okay. There are 10 OTQ questions and short answer, true or false questions like that. Okay. Right. So you're going to start the paper, right? Okay. Now, so far, is it okay? Please send those your whatever the questions to the name held as Sandeepa, right? So that I can see. Yeah. Right. Okay. Right. So we are going to start the paper. Right. Api prashna pattare patan ganna yan. Me paper I hope it is okay to use a bit of Sinhala as well. Right. Mega poddak hondara balaganda. මේක මම එක ෂුවර් කරලා කියනවා. ඉතින් මේ පේපරේ වගේම පේපරයක් එයි මේක මම ගොඩාක් ඇනලයිස් කරලා තමයි පේපරේ හැදුවේ. මහන්සි වෙලා හැදුවේ. හරිද? right. අපි යමු පේපර් එකට. okay. I'm going to do the paper with you all. මම ඔයාලත් එක්කම පේපර් එක ඩිස්කස් කරගෙන උත්තර ටික දාගෙන යනවා. හරිද? PDF එක ළඟ තියාගන්න මෙතනින්ම බලාගන්න ලේසියි එතකොට. හරිද? right. What is the main purpose? What is the main purpose of financial accounting in a firm? Right? Pretty easy question. About the objective or the purpose of accounting, there are basically 3 things what you need to remember, right? So when it comes to the objective, our objective is to provide financial information. Our objective is to provide financial information, and we are going to provide them to the stakeholders. And why are we providing them? For them to take economic decisions. That is our whole purpose. What you need to remember is these 3 things. Right? What is the objective? Right? We are going to provide financial information. Okay. To whom? To stakeholders. And why are we providing? For them to take economic decisions. If you clearly identify, there are basically the preposition we always is to. Right? So then it's easy to remember. Now our objective is to provide financial information to stakeholders for them to make economic decisions. Pretty easy, right? Okay, we'll look at the answers given. To provide information to the managers to take decision, that's about the management accounting. No? To provide information to the government to charge taxes. Okay, we provide information to the government, but that's not the main purpose. To provide information to monitor compliance. Right, that is also not there. To provide information to external stakeholders to take decisions. That is more likely. So for the first one, the correct answer is the 4th answer, right? So the first one, the correct answer is the 4th answer, to provide information to the external stakeholders for them to take decision. So more likely one, na? Right? Okay. I hope you all are with me. So I'll gradually move on to the next question, na? It's fairly easy, right? Question number 2. Which of the following accounting concept provides the basis to recognize the sales revenue related to goods? Sales revenue related to goods in the statement of profit or loss. In the statement of profit or loss at the point of delivery. At the point of delivery. Lamai, you all know that we have 14 accounting standards. So accounting concepts. We have 14 accounting concepts. And In your paper, there will be two questions. Generally, two questions from the accounting concepts. It may be 3 questions maximum, but generally 2 questions. What do they test? Under accounting concept, they test the meaning and examples. Meaning and examples. Right now, this is a classic example. Right? What is the accounting concept that says the sales income shall be recognized for a sale of a good when the item is delivered to a customer? Right? Delivered to a customer. What is the concept that says that? Right? We'll look at what is accrual concept says. Accrual concept says transaction shall be recognized as and when it is incurred, not at the point of cash, receipt or payment. That is what is said in the accrual concept. Transaction shall be recognized as and when it is incurred, not at the point of cash receipt or the payment. So I think this one is not the correct answer. They are talking about the transaction being incurred, not at the point of cash receipt or the payment. Right? We look at the prudence concept. What does it say? Prudence concept says assets and income shall not be overstated. Shall not be overstated. Liabilities and expenses shall not be understated. So what does it? The prudence concept says don't manipulate the financials. Don't try to show something you don't have. Don't try to show a profit you don't have. Don't try to show a highly valued assets you don't have. So don't overstate assets. Don't overstate income. Don't understate liabilities. Don't understate expenses. Show what really it is, right? Show the realistic values. That is what it said in the prudence concept. It's not, directly relevant to this one, right? Realization. What does it say? Realization concept is applicable for income. It's particularly applicable for income recognition. When to recognize income. When to recognize income. And it says, right? It says, income shall be recognized when you have the legal right to receive. Legal right to receive cash. You should recognize the income when you have a legal right to receive. When you have a legal right to receive. And when are we going to establish that legal right? When we have honored the promises, right? When we have honored the promises. Particularly, if this is applicable for a sale of a good, the promise will be promise will be honored when the goods are being delivered. When the goods are being delivered. In case of a service, when the service is provided, when the service is rendered, when the service is provided, right? So basically it says, realization concept says, it's about income recognition. You need to recognize income when the seller or the service provider has legal right to receive the payment. Then when it is established, when you have honored the promises. As a seller, you are honoring something to the buyer. So basically, if it is a sale of good, at the point of delivery, service, when you have given the service. So that's it. That's the correct answer. So the realization. What does the matching concept says? Matching concept is particularly relevant to profit line. It says when you are calculating the profit from the relevant revenue, you need to deduct from the relevant income. Sorry, from the relevant income, you need to deduct the relevant expenses. You need to deduct the relevant expenses. You need to match. You need to match the income and the expenses when you are calculating the profit. When you are generating an income, if there are certain expenses you incurred, you need to match and calculate the profit for that income, that particular expense. That is what is said in the matching concept. So basically the answer is realization. Okay, right. Now if you don't understand anything, if my speed is too much or whatever the concern, you can always drop me a message, right? I am there as Sandeepa. I can see whatever your messages and even I can hear your voice, right? So you can unmute yourself and you can ask anything. Okay. Right. We'll move on to question number 1.3 then. 1.3. Right. It says, Hustley traders acquired an equipment. Hustley traders acquired an equipment for rupees 2 million on 1st April 2021. Okay. The equipment are depreciated by the business using a reducing balance method. Another term we are using is diminishing balance. Diminishing balance method at a rate of 20% per annum. Depreciation charge for the year ended 31st of March 2023. So we have acquired on 2021. So 2022 and 2023. So that means we are asking the per annum depreciation on the second year. Second year depreciation is the question, right? Okay. Now, let me give a brief explanation. Depreciation is systematic allocation of depreciable value of a PPE, property, plant and equipment, over its useful life. This is the definition of depreciation. Depreciation is the systematic allocation of the depreciable value, the value you can depreciate of a property, plant and equipment. PP items are the buildings, office equipment, tools, motor vehicles, this and that, over its useful life. When it comes to the systematic allocation, there are two methods you can use. In the standard, we have three methods, but for your level, we are talking about basically two methods. One method is what we call the straight line method. Straight line method. The other method is what we call the reducing balance method. Reducing balance method, right? Straight line method and the reducing balance method. In the straight line method, we have an assumption that we are going to get similar benefits over the useful life. For an example, if we purchase a building, if you are going to use that building for 20 years, every year I'm going to generate same income. That is assumption. No? Every year same income. Okay, this year 200,000, next year 200,000, third year 200,000, like that. It will be like static. That is the assumption. The reduce imbalance method, the assumption is this particular PP item, initially you are generating high benefit. Initially you are generating higher revenue, higher income, which will gradually come down. For an example, you purchase a motor vehicle. In the initial years, the motor vehicle is also quite good, the condition is good, so that you can generate more income or more cost savings, initially higher. But with the usage, the benefits will come down. For example, first year 200, next year 100,000, third year 50,000, like that. It's gradually coming down. Right? These are two assumptions, not that it's going to happen particularly like that. These are the assumptions we make. So in a straight line method, when you're assuming that you're going to get static returns, your depreciation charge should also be static. Right? It should be the same figure you are charging. That is why we calculate the depreciation as cost less whatever the residual value. Residual value is the value you are going to obtain by selling the asset at the end of the useful life, right? Divided by the useful life. This is how you calculate. Or you can use another method, cost into depreciation rate. So one method is cost minus residual value divided by the useful life. Residual value is the value you are going to recover at the end of the useful life. That is the one method, straight line method. In the reduce imbalance method, right, this is a little different because you need to charge higher depreciation at the beginning, which will gradually come down because you are getting benefits higher. So you need to match, no? Depreciation you need to match with it's coming with the matching concept, no? You need to match the depreciation charge against the benefits you are getting. That's the whole idea. So this is calculated in such a way, your opening net book value is multiplied by the depreciation rate. right? So reduced imbalance depreciation rate is calculated 1 minus n into right, residual value R divided by CO, something like that. There's a ratio, right? So we are going to use to calculate, but that will not be tested from you all. Okay. And basically you are calculating the opening net book value into depreciation. How do we calculate opening net book value? Cost less opening accumulated depreciation. That is how we calculate. So always the reduced imbalance will be calculated costless opening accumulated depreciation into depreciation rate. That is how we calculate. Okay, right. So that is basically the background. Now we are supposed to calculate the second year depreciation. Okay, right. So if you want, you can take a screenshot or whatever. Right. Okay. Let me do the calculation. No? I'm going to erase this one. Okay. Right. So let us do the calculation. First of all, let me calculate the first year depreciation. You know the formula, opening net book value into depreciation rate. So opening net book value is your cost less opening accumulated depreciation, right, into depreciation rate. So cost of the asset is 2 million. We don't have opening accumulated depreciation at the beginning. Into depreciation rate is 20%. So the first year depreciation is 400,000. 400,000. Now what we need is not the 400. We need the second year depreciation, right? So we will calculate the second year depreciation. Once again, the same formula, opening net book value into depreciation rate, which is cost less opening accumulated depreciation into depreciation rate. So the cost is 2 million. Opening accumulated depreciation is 400,000. Multiplied by the depreciation rate is 20%. Thus, we're getting 1.6 million into 20%. So I'm getting an answer 320,000. So which is my third answer. Okay, right. Now, please let me know that I tend to give a small explanation as well, but if you want, I can straight away do the calculation or whatever and give you the answer. Can you all let me know whether this way is okay or you want me to change the method? Is it explain and do the so you just answer, right? This is okay, no? Right.
So it's better with the explanation.
Yeah, thank you. I really like your responses because that will make me feel that I'm also live and you're also live, right? So please
Okay.
give me that. Thank you very much. Right. Okay, super. Super. Right. Okay, there was one question. So I'm self-studying for AAT one exam because I couldn't find a class. Would it be a problem? It won't be a problem. I think you'll have done to a certain extent. Get the support of vLearning, and in the next stage, you can actually get our support for the full course. Right? Okay. Good, good. Very good, very good, very good. Right. Super. Very good. Right. 1.4. 1.4. This is a kind of a tricky question I prepared. Shall I give you, like one or 2 minutes to crack this question, right? This is something I prepared, right? Ashini's business received an order to sell 40 items. Okay. Ashini's business received an order to sell 40 items. The cost per item is 100, right? Cost per item is 100. Okay. And the selling price is 120. Selling price is 120. Customer has paid the full amount. Customer had paid the full amount. Okay, on the same day. On the same day, customer has paid the full amount. When the customer placed the order, customer has paid the full amount. Right, good. However, the business delivered only 50% of the items to the customer by 31st of March. Customer has delivered only 50% by 31st of March. Select from the following the correct impact to the accounting equation regarding this transaction. Right? So there are 40 items. Cost per unit is 100. Selling price is 120. And the total sale value paid. But 50% is delivered. Right. This is the question. Right. Okay, I'll give you like 1 minute because this is kind of a tricky question I prepared. Give it a try. What do you try එකක් දෙන්න? පුළුවන් නම් චූටි try එකක් දෙන්න බලන්න. අමාරුයි නේද මේ ප්‍රශ්නේ? Right. Very good. Very good. Very good. I'm getting answers and I'm pretty impressed. Right. Amai, if you all can, send me the answer in the chat, I'll. Right. Okay. I'm getting some answers. Very good. Very good. Right. If you all can send me the answers, that'll be really great. Right. Few have answered. Little tricky, but interesting. Right. Good. Right. I've got several answers. For the time being, let me work out the answer. But carefully look at this one. This is a good question. Right. Now, we'll take one by one separately. Now, 40 items are there. 100 is the cost, per unit cost. 120 is the per unit selling price. First of all, it says customer has paid the full amount. Right. We'll take assets, liabilities, and equity. In this type of a question, you need to crack that question into several elements. Then you need to see it separately, then take the total impact. That is how we are supposed to do. First one as a transaction is customer has paid the full amount. Customer has paid the full amount. So how much is the full amount? 120 into 40 units. 120 into 40 units is the full amount. So you are getting cash. You are getting cash. So one side, your customer has paid 4,800. Right? Customer has paid 4,800. The cash goes up. But when the customer has given the money, you haven't delivered the goods yet, no? Tama, items එක දීලා නැහැ. Right? On the very first day when the customer has placed the order, so customer has given money, but you haven't placed the order. So then it will become a liability, which is what we call the amount received in advance. So that on the other side, the liability will increase. Customer paid, okay, we got money, but we haven't delivered the items yet, no? So that money will become our liability. That is the first part. Now we'll look at the second one. Then it says the business has delivered only 50%. Business has delivered only 50% of the items to the customer. Right? Business has delivered 50% of the items, right? Then what will happen? Out of the 40 items, when you deliver, 50% is 20 items. 20 items into 100, your inventory will come down by 2,000. So one side, your inventory will come down by 2,000. your inventory will come down by 2000. And now, since you have delivered 20 items, you can recognize that income now, right? Now, by 2000, your inventory will come down because you have delivered half of it. And now you can recognize that income. So, 20 into 120 is 2400. So now the amount received, I have put that under the income received in advance. No? From this, I can transfer, I can remove 2400 from here, and I can recognize that in the equity, right? And the cost of the item will become, inventory will become my expense, right? Okay, my inventory came down, it became an expense. That is my cost of sale. So 2000 became my cost of sale. And out of the 4800, the amount received in advance, now 50% I can recognize as an income because I have delivered 50% of the goods. හරිද? 4800ක් හම්බුණා. මුලින්ම සල්ලි හම්බෙච්ච මම ඒක ඉන්කම් වෙන්නේ නැහනේ. ඉන්කම් එක රෙකග්නයිස් කරන්න පුළුවන් අපි ප්‍රොමිස් එක ඩිලිවර් කරාට පස්සේ. පොරොන්දු ඉෂ්ට කරාට පස්සේ. පොරොන්දුව තමයි අයිටම් 40ක් දෙන එක. මුලින්ම සල්ලි හම්බුණා. දැන් හම්බෙච්ච සල්ලි අපේ වගකීමක්. It's a responsibility. ඊට පස්සේ භාගයක් දීලා. එතකොට දුන්නාම ඉන්වෙන්ටරි අඩු වෙනවා. ඒක අපේ cost එකක් වෙනවා. Inventory comes down, it will become a cost 2000. අනිත් පැත්තෙන් අපිට අර දුන්න liability එකෙන් customer ගෙන් ගත්ත සල්ලි වලින් දැන් 50% අපිට liability අඩු වුණා. අපි items දුන්නානේ, we can recognize the revenue. So if you take the net 2800 here, 2400 here, and here is 400. So the correct answer is going to be number 4. 4 is the correct answer. හතරවෙනි එක තමයි හරි උත්තරේ. I'm really happy that Abdullah gave me the answer within a few seconds, right? Brilliant. Okay, right? You all got this point, huh? මේක තේරුණා නේද? The particular concept here is realization. මෙතනට අදාළ වෙන්නේ realization කියන concept එක. හරි? තේරුණානේ? Okay? Good.
Good, sir.
Hey,
Let's move on to the next question here.
Right. Thank you. Thank you. Right. So we'll move on to, okay, once again, a bit of a tough question, I would say. Right? Okay. The bank statement as at 31st of March has an unfavorable balance. Okay. Unfavorable balance means, Lama, you have an overdraft. OD. Is 107,000. 107,000, you have an OD. There was a standing payment, standing order, standing payment of rent, 20,000. Okay. And a direct deposit received from the customer of rupees 10,000. Okay. That has not been recorded in the cash. The unrealized deposits were rupees 15,000 and unpresented payments were rupees 18,000. Unpresented payments were rupees 18,000. What is the cash book balance? They're asking you the cash book balance before whatever these adjustments. That means before these standing orders and direct deposits and whatever. What is the cash book balance? Okay. So you got basically 4 answers. You're supposed to do the calculation. Right. Let me first of all brief. Right. Let me first of all brief. Now, I will explain this concept of bank reconciliation in a very, very simple manner. Right. You all know that now when it comes to a business, right, when it comes to a business, Lamai, right, we do maintain current accounts in the banks, right? We do maintain current accounts in the bank. So that is pretty much needed because we have to do the transactions, we need to issue the checks, and we generally do that through the current account. That is how we run a business. So that for this current account, business is keeping a cash book, right? Even though we use the term cash, it's about basically bank, right? Cash book. And for this particular current account, bank every month end they send a statement. Every month end, bank is sending a statement about what has happened in this current account. Okay, this is what we call the bank statement. Bank statement. Now for business, cash is an asset. Where increase we recognize as debit, decrease we recognize as credit. Asset increase is a debit, decrease is a credit. But for the bank, whatever the cash in this current account, for them it's a liability. No? Somebody's cash, now if you take the bank's point of view, some person is keeping cash with us. Now we have to give it back to that person. No? So for the bank, it's a liability. So in a liability, increase is a credit, decrease is a debit. That is why we say, if you take the cash book and the statements, it's like the mirror opposite, right? Here the debit is connected to credit. It's kind of a mirror opposite, right? So cash book, we consider as an asset, but for the bank, the same account, they maintain as a liability, and we have this mirror opposite, okay? Ideally, cash book transactions, whatever the cash book transactions versus the transaction in the bank statement, right? If there's no other issue or whatever, ideally it would be the same. Whatever the cash book debits will be there in the bank statement credit. Whatever the cash book credit will be the bank statement debits. Like that, it should be tally. But there are differences. There are differences. With the cash book and the bank statement lamai, there are differences. Basically, we can classify these differences into three. These differences we can classify into three. One particular difference is what we call omissions, right? Omissions. Another type of difference is what we call errors. The third type of the difference is what we call the time differences or the timing differences. These are the basically three types of differences that can create in between cash book and the bank statement. Omissions are basically something that accountant has missed out. Accountant has missed out. For an example, there can be standing orders. There can be direct deposits. There can be bank charges. So sometimes the bank has received a direct deposit, but the accountant may not know. So they might have omitted. There can be bank charges, the checkbook charges, bank interest, OD interest. Accountant might have missed that one. And there can be standing order payments. Sometimes, we tell the banker to send certain payments on a particular date. Right? We send our, kind of a order to the bank to make this payment on this particular date. That's what called the standing orders. But those are there, but the accountant might have missed. That will create certain differences. Errors, right? There are two types of errors. Accountant can make errors as well as the bank can make errors. Accountant is making some errors. So which is common. We as human beings, we tend to make errors. Sometimes we have calculation errors, overstatements, we put some other different transactions in the cash book like that, we can make errors. Secondly, bank may even can make errors. That is little rare because banks have a lot of, their supervision, monitoring and control is much higher. So that generally the error from a bank is little less than a typical accountant. Last one is what we call the timing differences. Now, what is a timing difference, right? This is a genuine difference, right? You can't do anything for that. In a timing difference, what happens is particularly there are two types. Timing differences relevant to deposits and payments. Now, for an example, you make a deposit, right? You as the accountant, on the very last day, 31st of March, you make a deposit to the bank. And in your account, you put the transaction debit. I made the deposit, therefore debited to cash book. Debited to cash book. Here the cash book refers to the bank account. We use the term cash book, right? You made the deposit and you debit the bank account. But You know, the banking system, if it is within the same bank, it might get updated daily. But other than that, for other banks, it will take, like 1 day, right? Sometimes if you caught up in a weekend, right? If you caught up on a maybe Friday, it will take 2-3 days to get updated. Okay. Therefore, now genuinely it will create a difference. Why? In our cash book, we deposited on 31st of March. But your bank statement will get realized maybe on 2nd of April. But no one is doing any mistake or no one is doing anything wrong. It's something very genuine difference. Bank book deposited, it has not come to the bank yet, not realized yet. Maybe 1 or 2, 3 days it'll take. Other one is the unpresented payments. Payments. When the accountant issue a payment, when a supplier comes, accountant is writing the check and give that check to the supplier. When an employee comes asking for the salary, accountant might write a check and give that salary. The building owner comes and asks, you write a check and give that check to the building owner. But at the time you are giving that check, you are reducing your cash because that's the process, no? Once there's a payment voucher, you need to record that in the prime entry book, then it will be updated in the ledger, right? That's how it works. So you write the payment voucher and give it the check, your cash book balance will come down. But it doesn't mean the recipient who has got that check is going to deposit, is going to present that to the bank on the same moment, no? He might take a couple of days. The landlord got the check, he went on to another, whatever the trip or whatever, he'll put that to the bank maybe a couple of days later, maybe a couple of weeks later even. It can happen. And even he presented that check to the bank, once again the realization process will take 1 or 2 days. So that will create a genuine difference. That will create a genuine difference between the cash book balance and the bank statement balance, right? Then what we'll do is, Lamai, of these differences, omissions is something we need to correct. Errors by the accountant is something we need to correct. These two we are going to adjust to the cash book, right? We are going to adjust to the cash book. Omissions, the accountant has missed these whatever the charges, that need to adjust. Errors by the accountant need to correct, no? That will be adjust. But errors made by the bank, you can't adjust, no? And the timing differences, it's not a nothing, there's no error, but it will create a difference. So these two we are going to show in a statement called bank reconciliation. Now, bank reconciliation is not something you are going to use to correct. Reconciliation is not correcting. Reconciliation is just showing why there's a difference. Reconciliation says why there's a difference between these two, but you can't correct. The adjustments, the corrections you are making to the cash book for omission and the errors by the accountant. But the timing differences and whatever the bank errors, you can show in a reconciliation, right? I know this is bank reconciliation is basically like the 6th lesson. Some of you might have not done it yet. That is why I explain, right? So you are passing a double entry for omissions and the errors by the accountants, and you are showing the errors by the bank and the timing differences in a bank rec. But sometimes in a question like this, you need to do the bank reconciliation covering everything, right? So like that, sometimes you have to do. Okay, right? That is one thing. You know, guys, when it comes to bank recs, there can be situations the business might positive balance or a negative balance like an overdraft. Don't worry, right? The mechanism of doing bank reconciliation does not vary depending on whether it's an OD balance or a positive cash balance. Same procedure you are going to follow, and ultimately plus and minuses will do the magic. Okay, so same way I'll tell you how to do that, and if you can follow that method, that will be pretty easy. For bank reconciliation, I have a method. If you can use it, definitely you are going to tackle the answer within a very short few seconds, right? Okay, so the theory part on bank recs, is it okay? I gave a very small explanation to explain what is this rec. Some people might have learned this one, but some may be new. Okay, right. Rec part okay. Shall I move on to the question then? Clear?
Yeah, sure.
Right. Okay. Super. Right. Okay. You can always this particular video I think is live streamed on JMC YouTube channel or JMC Virtual Learning YouTube channel. Therefore, if somebody has a concern now, while doing the lesson, they can always go back to the YouTube video and you can always check. Huh? Right. Okay. Let me work out the answer. Right. Don't worry, reconciliations are pretty easy. Right. Let me tell how to tackle it. Right. We'll start. Right. Starting off with now we are going to prepare the RECA. We are going to prepare the bank reconciliation. Right. Okay. We are going to prepare the bank rec. Okay. Right. Now we are going to start with the bank statement balance because that is what we have. We are going to start with the bank statement balance and we will move on to the cash book. Generally, it's the other way around. Generally, you start with the cash book and you go to the bank statement. That is how the general question comes. But this question I have set up in the other way. You start with the statement, you go to the cash book. Don't worry. Either way, that's okay, right? Some people try to memorize the bank recs and do. That is why I have purposely put this question. If somebody is trying to do something, memorize and do a question, you can't do this. Right, let's try. Okay, bank statement balance is an overdraft. Since it's an overdraft, you need to put that as a minus balance. That's the magic, right? Since it's an OD, you need to put that as a minus balance, right? So that's the small thing that you need to do. Then forget about this is an OD. Yeah? Forget about this is an OD. What you need to do is, if it is an overdraft, put that as a minus balance. If it is a positive balance, put that as a positive balance, positive figure. Then forget about it, right? The ODO, whatever, then forget about it, right? So we have just put it. Right, now let me tell you how to do the reconciliation, right? Okay, this is how it works. This is my method of doing. I'm going to use my two hands here, which is quite easy, right? So one hand, I'm going to name it as my cash book. Okay, this is my cash book. This is my cash book. And this one is the bank statement. Cash book, bank statement, cash book, bank statement, right? Okay. Now, what we are going to do is, Lamai, we will take one by one this transaction and we will adjust that impact to my two hands, to the cash book and to the bank statement. Then we'll identify whether it is higher or lower, whether it is high or low. Then we can make the adjustment here. Right, let me show you. Right, we'll start with the first one. Now, I told you, forget about it being a bank OD, yeah? Right, otherwise then it will be a little difficult for you to think, right? Okay, there was a standing payment of rent 20,000, right? Rent payment 20,000. Now we'll think, right? Cash book, bank statement. This is a standing order, no? This is a standing order. So the accountant has missed. Accountant don't know. Accountant has not adjusted. Cash book stays as it is, right? So we'll take the two balances like this, cash book, bank statement. Standing order payment, accountant don't know about, accountant has not adjusted the standing payment. It's an omission. But bank balance is lower. It's a payment, no? Right? So the bank balance is lower. Bank statement balance is lower. Cash book, nothing. Omitted. Bank statement balance lower. Right? Now, look here. Cash book is higher. Bank statement is lower. Right? Now, look here. We are going to move from statement to the cash book. Right? Once again, cash book, bank statement, standing order payment. Right? From where we are going to move? From the statement to the cash book. From the statement to the cash book. Statement balance is lower, cash book balance is higher. So we are going to go from the lower balance to the higher balance. From the statement to the cash book. Then what we need to do, we need to add. So we are going to add the standing order. We are going to add the standing order 20,000. Right? Okay, so it's simple, right? Cash book statement, standing order, bank statement balance is lower. From the statement, we are going to go to the cash book. Therefore, we have added, right? Pretty easy, right? We look at the second one. Direct deposit received from the customer of rupees 10,000 that has not been recorded in the cash book, right? Direct deposit is an omission, no? Cash book, bank statement. Cash book, bank statement. Direct deposit. It's been omitted. It's been omitted in the cash book. Accountant has omitted, so nothing to do here. But it has been directly deposited to the bank statement. Therefore, the statement balance is higher. Statement balance is higher, right? Now you know what has happened, now? Now we'll see from where to where you are going to go. From the statement to the cash book. From the statement to the cash book. Statement balance is higher, no? You are coming to the cash book. That means you need to deduct. That means you need to deduct. So we are going to deduct the direct deposit. We are going to deduct the direct deposit, which is 10,000. Which is 10,000. Right? So direct deposit statement is higher. Bank book is cash book is lower. From the statement, you are coming to the cash book. Okay? Right. If you don't understand, please let me know. Right. This is easy, pretty easy. It'll look like little crazy when you are trying to do that in the exam hall, you know, like this and that, but I'll assure you are going to get the correct answer. Right. Now we'll come to the next item. Unrealized deposits 15,000. Unrealized deposits 15,000. Okay. Now let's see what has happened. Cash book, bank statement. Cash book, bank statement. Unrealized deposits. That means what? The accountant has made the deposit in the cash book. Now in the cash book, we have made the deposit. Cash book, we have made the deposit. Our cash book balance is higher. But it has not realized to the bank statement. It has not realized to the bank statement. Not realized to the bank statement. So there was a deposit check. You have deposited, but it has not realized to the bank yet. Now from where to where you are going to go? From the statement to the cash book. From the statement to the cash book. How do you decide? From the statement to the cash book. Then what will happen? From the statement to the cash book, I have to add. I'm going to go to the cash book. Right? So we are going to add the unrealized deposit, which is coming to a value of rupees 15,000. Right. 15,000. Okay? Right. Now we have tackled 3. The last thing we need to tackle is unpresented payments. Unpresented payments. Right? Once again, cash book and the bank statement. Now accountant has issued check. Accountant has issued some checks to the suppliers, landlords, employees, whoever. Accountant has issued check means accountant is crediting. Accountant is reducing the cash balance. Accountant is reducing that bank balance, right? So the cash book balance is lower. But it has not presented to the bank yet. It still has not come to the bank yet. So the statement balance is higher. Statement balance is higher. Accountant issued the check. Cash book balance is lower. It has not come to the bank yet. So cash book balance is lower. Statement balance is higher. Now from where to where you are going to go? From the statement to the cash book. From the statement to the cash book. Then you are coming down, right? You need to deduct. So you are going to deduct unpresented payments. Mark my word, you are not going to get this type of a difficult question. You are going to get an easy question, but I told you I am going to make a paper little difficult, not right. Done. So that's it. We have tackled the 2 adjustments, right? Then we'll take 20 plus 15 is 35,000. 10 plus 18 is 28,000. Right, now use the calculator and we'll get the answer. Minus 107,000 plus 35,000 minus 28,000. So you'll be getting 100,000, which is our fourth answer. 100,000 unfavorable balance because it's negative. No? Sorry, that's the answer. 100,000 a negative balance. It may be a little tough, little difficult, little unorthodox, but I wanted to break some memorizing patterns of the students. That's why I have put this question. Okay. Right? Isn't it? It's easy. Thank you. Fatima has said, don't limit to this question. Apply for whatever the bank rec question. You will get the answers pretty easily, right? It's quite easy, right? It's the magic that you can use. Okay, right. Okay, good. Right. Any issues, concerns, clarifications? Right? Was it easy? Was it good? Right? My way of doing bank recs. Right? Frankly speaking, now you don't have to, if this lesson is not covered yet in whatever your classes, you don't have to actually. You can actually now, if you have understood the method, you can do whatever the question. You can do all the questions. Good. Shall I move on? Okay, no?
Okay, sir.
Right. Thank you. Right. Done. 1.5. Okay, let's come to 1.6. 1.6. Under the traditional classification of accounts, ledger accounts can be categorized as real accounts, personal accounts, and nominal accounts. Okay, now look here. Now, if you take the ledger, right? What is ledger? Ledger is basically collection of accounts. Collection of accounts. You can keep it either manually in a book or in an electronic space. That is what we call ledger, where we collect collection of information basically, right? Okay, and this ledger, the new way of classifying is Lamai. Ledger can be divided into two as general ledger and the subledger. Okay, this general ledger has the accounts, asset accounts, equity accounts, liability accounts, income accounts, and expense accounts. Subledger can be divided into two as the debtor ledger and the creditor ledger. Right? Debtor ledger and the creditor ledger. This is basically the classification now we use. Right? So the ledger can be divided into two as general ledger. This is where we practice the double entry system. We practice the double entry system in the general ledger, where you capture the transactions from the source documents. In a business, you do a lot of transactions. That is the whole purpose of having a business, to do the transactions. You create businesses, right? So the transaction, there are a lot of transactions that are happening, and even the events. You capture them through the source documents. Then you have a complete record on the prime entry books. Then the prime entry books total, you pass a double entry in the general ledger. The double entry goes to asset, equity, liability, income, and expenses. Right? Then you you close the ledger accounts, you prepare the trial balance, and you prepare the financial statement. That's the process now. And separately, you maintain a subledger. In the subledger, you don't have the double entry, you have the single entry. Right? So this is particularly applicable only for the debtors and the creditors. Because in the general ledger, to represent all the debtors, you have a single account called debtors control account. To represent all the creditors, you have one account called creditors control account. Otherwise, the ledger will be unnecessarily lengthy and complex, right? And it will take time to prepare the financial statements even now. So what you do is, here you are maintaining control accounts, debtors and creditors, but separately in a separate book, you maintain debtors individual account separately, creditors individual account separately, where you pass a single entry, not a double entry, right? So this is what the classification of the ledger is, right? Now, traditionally, there was another classification, and we can connect it here. The asset accounts, equity accounts, and the liability accounts is what we call the real accounts. Real accounts. That's true, right? You know, that is where everything has started in the accounting equation. Assets equal equity plus liabilities. Then only we create income and expenses. No, income expenses are is particularly applicable only for a year, right? So the revenue for that year, then you are going to close the account. Salary expense for the year, you are going to close the account. But property, plant, and equipment, you are going to continue. Debtors, you are going to continue. Loan, you are going to continue. The continuing accounts are assets, equity, liabilities. Those are the real accounts. Those are the real accounts. Those are the accounts you continue. Those are the accounts you maintain. Income and expenses are coming in our expanded accounting equation, where we add income, we deduct expenses. Those are created only for a year, only for a period. Income and the expense accounts are what we call the nominal accounts. Nominal accounts. We create that only for a period, no? At the end of the period, we transfer them to profit or loss. Then that profit will be added to the equity, right? So this will be taken to the P&L, and the P&L summary will be added to the equity. So those are just nominal accounts, right? Asset, equity, liability, real. We continue. Income, expenses, nominal, only for a year. Debtor ledger and the creditor ledger, these are maintained under the personal names. So these two ledgers are what we call the personal accounts. These are not from the main accounting process, but we maintain accounts under the name. That's the classification. This is a modern classification. This is the traditional classification. Okay, right. I hope you got the idea. Under the traditional classification of accounts, ledger accounts can be categorized as real accounts, personal accounts, and nominal accounts. Which one of the following is an example for real account? It's pretty easy, right? Real accounts are the accounts which represent either an asset, equity, or a liability, right? Okay, we'll say sales, no, that's an income. Electricity expense, no, that's an expense. Vehicle repair, no, it's an expense. Then obviously this one. Rent income receivable means it's an asset. Rent income receivable, it's not the rent income, it's the rent income receivable you are supposed to receive. So fourth one is the correct answer, right? Fourth one is the correct answer, right? Always remember, income expense accounts are not real accounts. Real accounts are the assets and the asset liabilities and the equity. Clear? Okay, right. Okay, good. Right. Let me move on. Question number 1.7. Of the following, select the correct statement. Of the following, select the correct statement. Right, we'll see. Human capital is not accounted even if is accounted even if it cannot be measured in monetary terms. Human capital is accounted even if it cannot be measured in monetary terms. That's pretty wrong, no? Right? The fundamental reason for you to not to account human capital, is you cannot measure, you cannot put a value. That's the most difficult thing. Now, for an example, if it is a law firm, my lawyers are the people who bring income. They are definitely an asset to the law firm. If you look at chartered accountants firm, chartered accountants, that human capital is bringing income. Engineers, doctors, right? Definitely human capital is bringing. It is an asset, but we cannot record because you cannot put a value. Therefore, this one is wrong, right? This is against the money measurement concept. This is not the answer. Second one, the bad debts are written off to the statement of profit or loss mainly due to matching concept. Mainly due to matching concept. Alright. Now, what is the bad debt? You have done a credit sale, which will create a debtor. You made a sale, you are not receiving cash today, you are going to receive cash after a credit period, 1 month or 2 months or 3 months, right? So you are making a credit sale, thus it will create a debtor, right? And if the debtor is facing some financial difficulties, right? So debtor might go bankrupt, therefore you need to take the loss. You made the sale, you gave the items, now debtor has gone bankrupt, is not giving us money, I'll be taking the loss. That's a bad debt. So bad debt is recognized, bad debt is considered as an expense. You reduce that from the debtor and you recognize the bad debt expense. What is the underlying accounting concept behind bad debts? The main accounting concept is matching concept. Why? When you are calculating the profit against the revenue, you need to match the relevant expense. Against the revenue, you need to match the relevant expense. You made the sale, but it is not recovered, you are at a loss. Against that sale, you need to match the bad debt expense. You made a sale, you are not getting money, there's a loss. Against that sale, you need to match the expense. So basically, this is the correct answer. This is the correct answer, right? Third one, the business is carried out in a premises belong to the owner. Business is paying a rental for using the premises to its owner. This is considered as a drawing by the business due to business entity concept, right? In the meantime, before I explain, someone has asked a question, what is human capital? Human capital is basically the people in a business. And because they bring money, we consider them to be a capital, right? Human capital are the people, right? We'll come here. Now, look here, the business is carried out in a premises belong to the owner, right? Now, let's say Mr. Raj. Raj is there. Raj has this building. Okay, this is a building. Yeah, okay. Raj has this building. Now, Raj has his own business. Business is carried out in his building, right? And it has not been given as a capital. It does not say something like that. The business is carried out in a premises belong to the owner. That premises belong to the owner. And Raj, the owner, is charging a rental, right? And what they are saying is, this is considered as a drawing. No, it's not a drawing. We know that as per the entity concept, business is separate, owner is separate. So the owner has given premises to the business to carry out their whatever the businesses. And the business need to pay a rental for that because business and the owner are two different. So that rental payment is not a drawing, rather it's an expense. Because you anyway have an opportunity cost. If you are not using the premises of the Raj, the owner, you have to hire it up from somebody else. Anyway, there's a cost. So for business, it's actually an expense, not a drawing, right? So this one is also wrong here. Fourth one, materiality depends on size only. No, materiality concept says, right, if there's an omission or a misstatement which can influence the decision, we say it's material. Omission or an misstatement, if it can influence the decision, it is material. Materiality depends on both size and the nature, right? Material depends both size and the nature. In a business, there's a fraud happen, let's say 100 million. Yes, it's material, right? Depending on the size of the business, yes, it can be material because it's 100 million, it's a huge amount, right? Depending on the stakeholders, you can consider it to be material. Sometimes there can be another fraud of 100,000. So amount wise, it may not be material, but what if that 100,000 fraud was done by the chairman? If that 100,000 fraud was done by a director, even though the amount is not material, it will become material because of the nature. Because if the chairman is cheating, if the chairman is making a fraud, then the entire business will have that implications, right? Therefore, material depends on both size and the nature. Both size and the nature. Right? So this is also not the correct answer. Right. Okay. Question number 1.8. Which of the following source document is issued by the procurement department to order the items? Another word for the procurement is purchase. Procurement means purchase. So now it's pretty easy. Yeah? Procurement means purchase to order. Purchase to order. Material requisition note, no. Material requisition note is issued by the whoever the department's asking for whatever the materials. Material purchase note, there's nothing called material purchase note. Purchase order, purchase order, yes. So the procurement department, the department who is responsible to purchase, for them to order the items, they are using purchase order, not the sales order. Right? So purchase order is the correct answer. Purchase order is the correct answer. Okay? Right. Okay. Right, we'll move on to question number 1.9. You need to remember this GRN, material requisition note, purchase order, invoice, right? The examiner might ask a question from one of these other source documents. You know, the general source documents are these receipt, payment voucher, sales invoice, purchase invoice, debit note, credit note, petty cash voucher, and the journal voucher, no? But there are some other source documents which is given in your study text, no? Goods received note, material requisition note, material issue note, purchase order. Just look at those things. Huh? Sometimes one question can be tested. Okay? Right. Okay. We'll come to question number 1.9. Huh? Question number 1.9. Kavima Traders is a business engaged in stationery. The monthly drawings of owner is rupees 5,000. Monthly drawings of the owner is rupees 5,000. During the year, the owner provided her personal computer worth of rupees 50,000 business. So the monthly drawings is 5,000, right, which is monthly. And during the year, owner has provided the personal computer which is worth of rupees 50,000. The financial position at the beginning and the end of the year is also given to you, right? So you have given the non-current assets, non-current liabilities and current liabilities. So you are supposed to calculate the profit for the year. You are supposed to calculate the profit for the year, right? Now, if you take your opening equity, I hope you can remember, you know the basic accounting equation, assets equal to equity plus liabilities. And you can isolate equity here by taking the liabilities to the other side. Asset minus liabilities equal to equity. That is pretty much the definition of equity. No? Equity definition is basically the residual amount after deducting liabilities from assets. So simply asset minus liabilities is equity. Another name for equity is what we call the net assets. Okay, right. So we'll keep this aside because we need that, right? To the opening equity, when you are doing the business lama, you are generating a profit. So we are going to add the profit to the opening equity. Then the owners may take some drawings. So we are going to deduct the drawings. And sometimes the business owners might invest some additional capital that we are going to add. Additional capital we are going to add. So which will create you the closing equity, right? Now, at the beginning of the year, you started the business where you had an opening equity balance, let's say the capital, whatever. Then you made a profit. So to the equity, we are adding the profit now. From that profit, the owner is making a drawing that we have to deduct. Right? And if there are any additional capital, we have to add that additional capital. Because that will increase the equity. No? So you'll come to the closing equity. Okay. Now we are going to isolate the profit here. We are going to isolate the profit here, right? We are going to isolate the profit here. So let me keep the profit here, and I'm going to take all the items to the other side of the equation. So here we have the closing equity, no? Right. Opening equity, when you take to the other side, it will be minus opening equity. Minus drawing to the other side plus drawings. Plus additional capital to the other side minus additional capital. Right? So this is what we call the profit equation. Profit equation is closing equity minus opening equity plus drawings minus additional capital. Okay? And you know that equity is about asset minus liability. So closing equity is closing asset minus closing liabilities. Opening equity is opening asset minus opening liabilities. So we know that equity equals to asset minus liability, no? Closing equity, closing asset minus closing liability, opening equity, opening asset minus opening liabilities. Okay. So we are going to use this idea to work out this question, right? Okay. In the meantime, someone has asked a question. So like procurement, is there another word for sales? Yes. For sales, the other word is revenue. Even we use another term called turnover. Turnover is another term we are using. Revenue is the most common word, right? The sales, right? Okay. Right. Lamai, definitely there will be a question from the profit equation. So please get yourself comfortable with this area. Right? Okay, I hope you got the idea. So shall I work out the answer then? Right? I gave the formula and everything. I'll work out the answer. Profit equation pretty easy, nothing difficult. Okay, good. Shall I do the calculation? Understood? Right, super. Right, thank you. Right, so let us do the calculation. So the profit equals to closing equity minus opening equity plus drawings minus additional capital, right? මේක ඇත්තටම මේ profit එකේ original formula එක නෙමෙයි හරිද? profit එකේ original formula එක income minus expenses නේ. මේක ඇවිල්ලා අර වටේ පාරකින් ගන්න තව equation එකක්. හරිද? Right, closing equity, we know that closing asset minus closing liabilities. Opening equity, opening asset minus opening liabilities. Drawings we need to do is monthly drawing into number 12. Additional capital is pretty easy, 50,000. Right, now we'll put the numbers. Closing assets, 500,000 and 200,000. 500,000 plus 200,000. Right, from that we need to deduct. Right, let me put it like this. 500,000 minus plus 200,000. Right, so total is 700,000 minus closing liabilities are 250 and 100. 250,000 and 100,000. So altogether is 350,000 minus opening assets 400,000, 150,000, altogether 550,000. Liabilities 300,000, 125,000, 425,000 minus. Okay, plus the drawings, which will come to 5,000 into 12 minus 50,000. So you will arrive at an answer 700,000 minus 350,000 minus 550,000 minus 425,000 plus 5,000 into 12 minus 50,000. I'm getting an answer, a profit of. So I'm at a profit of 235,000. Okay. Right. Okay. Right. Okay. The last MCQ question. Last MCQ question. Sandaru Traders is owned by Sandaru, obviously. During the year 2023, the business has paid Sandaru's personal loan installment. Sandaru's personal loan is business. The business has paid. Business has paid the Sandaru's personal loan installment. The loan installment is 100,000. Loan installment include interest 10,000 as well. The loan installment is 100,000. No, what they say is of that interest is 10,000 and the loan repayment is 90,000. Okay. Select the correct double entry for the above transaction. Now, Sandaru's loan installment 100,000, which include interest and loan repayment. Entire thing has been paid by the business. Business thing given Sandaru's personal loan. Right. What is the double entry? Sorry. Can anyone drop? Can you all attempt this one and tell me what is the correct entry? I have given you 4 answers. What do you think the correct entry? Easy. Right? What is the correct entry? Okay. Right. Please put the answers in the chat. Right. Hamon product try එකක් දෙන්න. What do you think the correct answer is? Right. Look here. Very good. I am getting the answers. Now this is the payment is entirely about personal loan. So whatever the payment is a drawing. As a business, we don't get anything. A business loan, this is not a loan of a business. It's not a loan of business. This is the owner's personal loan paid by the business. So it's entirely a drawing. So the correct answer is debited to drawings 100,000, credited to cash 100,000. Right? ඒක යාගේ interest expense එක අපේ expense එකක් වෙන්නේ නැහැ හොඳේ. Basically, owner's loan paid by the business. It's a owner's drawing. His interest expense will not become an interest expense of ours. තුන්වෙනි එක නෙමෙයි සමහර කට්ටිය තුන්වෙනි එක කියලා දානවා. මේ තුන්වෙනි එහෙම වුණොත් එහෙම එයාගේ ණයේ පොලිය අපිට වියදමක් කරා. එහෙම වෙන්නේ නැහැ. අයිතිකාරයා වෙනයි අපි වෙනයි. බිස්නස් එක වෙනයි. එයාගේ ණය loan installment එක කිව්වේ ඒක එයාගේ drawing එක. Right? Okay, good. Right. Okay. Now we'll come to the next part of the question. State whether the following statements are true or false. Write the answer true or false in the answer booklet with the number assigned to the question. Our answer booklet 10 because I'm going to do it online here. Right, we'll see. There are like 5 questions. Then we make a number true or false. Right, then it will be easier. Right, first one. As per the substance over form concept. Okay. Generally, from the concept, there will be like 2 to 3 questions. My paper questions to not them. As per the substance over form concept. In accounting, we consider legal reality than the economic substance when recording the transactions. I mean, substance over form. Substance means economic substance. Economic substance. Form means legal form. Over means substance form is higher. In other words, economic substance means economic reality. Economic reality. Legal form is legal reality. So in simple terms, when it comes to accounting, what matters to us is not the legal reality, but the economic reality. That is why we record leased assets. Sometimes we get the assets on a lease agreement. We are not the owner. We have rented out premises. We are not the owner, but we still recognize the asset. Right? We still recognize the asset. Companies are paying bonuses. There's no legal provision to pay bonuses, but we still make the provisions because what matters to us is economic reality. Okay? But here it says the other way, right? Substance or form, in accounting, we consider the legal reality than the economic substance. That's the other way, no? Right? So this statement is false. Okay? Very good. Very good. We will have put the answers. Right? Super. False. මේ හැමෝම දාන ඒකට ලස්සනයි. Right? හරි. අපි බලමු දෙවැනි එක. Purchase of furniture on credit are recorded in the purchase journal. True or false? දාන්න බලන්න. Purchase of furniture on credit. False. Right? False. Amai. What we record in the purchase journal are the credit purchase of inventory. What is inventory? Items purchased for resale. Items manufactured for resale. So whatever the credit purchases only, we put them in the purchase journal. If you are going to purchase an office equipment or furniture on credit, that is not going to the purchase journal, it will go to the general journal. Therefore, this is also a false statement. Right. Third one. The enhancing qualitative characteristics include comparability, completeness, understandability, and timeliness. Right? Let me explain it. Yeah. Now, let me explain it like this. But it is there in the syllabus. Huh? Right. Now, when it comes to the financial information, right, in accounting, we need that information to be a quality information, right? We need the information to be a quality information. Okay? So the financial accounting information should be a quality information. There are two types of qualities. One is fundamental, other one is enhancing. Fundamental are the basic qualities, it should be there. Fundamental are a must, it should be there. Right? Fundamental, there are two qualities. One is relevance. Other one is what we call faithful representation. Faithful representation. Relevance means it should be an important information. Right? In order to be a quality information, it should be an important information. Faithful representation means you have to tell the truth. You have to tell what is the reality. So fundamentally what we need is important truth. Right? Fundamentally. Enhancing, that means enhance, the word means is increasing. You are trying to increase the quality. You are trying to enhance the quality. There are 4 enhancing qualitative characteristics. First one is what we call the comparability. You should be able to compare. Second one is what we call the verifiability. You should be able to verify whether it is true. Third one is timeliness. Information should be available in time. Last one, understandability. It should be understandable to person with a reasonable knowledge. There are 4 enhancing qualitative characteristics. Comparability, you should be able to compare. Verifiability, you should be able to verify. And timeliness, information should be available on time. Understandability, it should be understandable. Please remember this can be tested, which is in your syllabus. Right, we look at the third one now. Enhancing qualitative characteristics include comparability, yes. Completeness, no. Understandability, yes. Timeliness. There's no such thing called completeness under enhancing. So the statement is false. The missing item is verifiability. Okay. So the item is false. Okay. Right. Right, we'll move on to the 1.14. A petty cashier has an imprest of rupees 50,000. Petty cashier has an imprest of rupees 50,000. During the period, petty cashier has spent 40,000 for petty cash expenses. Okay, petty cash imprest is 50. Petty cashier has spent 40. The main accountant shall reimburse 40,000. Is it correct or no? Does the main accountant need to provide 50,000 or is it 10,000 or 40,000? Because petty cash float method is you have been given a fixed amount, then you are spending from that amount. Whatever you're spending will be reimbursed by the main account. You are coming back to that float value. You are coming back to the imprest. So this one is true, right? It's a true statement, right? Very good, very good. Most of you all have put that as a true statement. 1.15. Interesting question. Sales return is an income account. Sales return, is it an income or an expense? Sales return. Sale කරන්න අපිට එනවා ඒ කරන sale එක සමහරට return වෙන්න පුළුවන්. Customer, when the customer is not happy with the quality or a defect, they can return the goods. What do you think? Right? Sales return, is it what as it says is sales return is an income account. Sales return කියලා කියන්නේ income එකක්ද expense එකක්ද? What do you think? Sales return, is it an income or expense? Yeah, very good, very good. Some answers I'm getting. The answer is it is an income. It's not an expense. Sales return is not an expense. It's a reduction of income. Sales return is not an expense. Sales return is a reduction of income. It's kind of a negative income, right? You have made a sale, customers are returning. That's not our expense. Our sale value is coming down. Sale return is income. Purchase return is an expense. Okay? Right? So Hamna is asking, is it an expense? No, it's not an expense. It is part of the return. It's a reduction of income. Right? So sales return is an income account. Right? Sales return is an income account. Good? Right? Righto. Okay, we have completed the 5 true or false questions as well. Okay, got it? Right. Okay, then write the answers from question number 1.16 to 1.20 in your answer booklet with the numbers assigned to the question. Right. Yeah, we can use this slide to put up the answers. Right. First one. Define the term income. Define the term income. This is how I remember income. Huh? I remember income in this method. Income will result in increase in asset, decrease in liabilities, which will result in increase in equity without any contribution from the owners or the equity participants. Right? This is the definition. This is the definition. But you can't write like this. You need to have a proper definition. But this is how I remember. So if you put that to a definition, it will come like this. Right? Income is the increase in equity in the form of either increase in assets or decrease in liabilities without any contribution from the equity participants. Right. So how do I remember this stuff? Because I can't remember this lengthy sentence. Right? The easy way is I remember using a small method. What I remember is kind of a chart in my head, okay? Income, assets will increase, liabilities will come down, which will result in increase in equity without any contribution from the equity participants, right? Okay, so this is basically the answer, 1.16. In the meantime, one student has asked a question. So, but reduction in income is expense, not always. Reduction in income is reduction in income. It need not to be always an expense, right? It can be an expense, but particularly the sales return is reduction in income, not an expense. Right. You can even Google it, right? Just Google it whether sales return, is it an expense? You can get a detailed answer. Right. Okay, I hope we are good. Question number 1.16. My definitions you need to remember. If you look at the past papers, always the first question in this writing area is to define. So one time it's assets, one time it's expense, one time it was equity, one time it was liability. What I observed is income has rarely been tested, so that this time it can be income, define income, right? I hope you are good, right? So we'll move on to the second one. Identify two differences between financial accounting and management accounting, right? 1.17, financial accounting and management accounting, right? Identify two differences. Identify two differences, right? Now, if you look at the stakeholders, financial accounting, internal and external both, right? Financial accounting is basically the financial statements you prepare. So this is applicable for all the stakeholders. Financial accounting is applicable for all the stakeholders. So internal and external both. Management accounting is applicable only to the management, so it's only internal. It's only internal, right? Then if you take the second one, the timeline. Generally, you prepare the financial accounting on an annual basis, generally. But management accounting, you have to prepare on demand. Whenever the management requires, you need to prepare. Then if you take thirdly, the format. Financial accounting, you have a standard format. These are given in the accounting standards. And you don't have no standard format. No standard format. In absence of standard format. Like that. If you look at the nature of the information, here basically it's about the past information. Management accounting, past and forecasted. Right? Then if you take a legal requirements, yes, financial accounting is a legal requirement. Management accounting is not. Okay. And the decisions you take, basically decisions on resource utilization. Resource utilization, you take decisions. Here basically about planning and controlling. Planning and controlling. Right? So basically you need to write only two, right? I just make a few, basically 6 differences, we have to write only 2. And whenever the question is asking to write differences, use a tabular format. It will save you. Okay. Right. So I have answered 2 questions. We'll try to write the answers for the other questions then. Right. Particular color. 1.18. State two importances of being ethical business. This is basically your last lesson. When you are doing a business, right, it's pretty important to run that business as an ethical business, right? For many reasons. In our world, there are so much of unethical businesses, but what we know is these unethical businesses, they might make profits or whatever the gains in a short term, but in the long run, they are not going to survive. You might have seen a lot of pyramid schemes, a lot of scams, right? And a lot of businesses who are ruining the environment, who are like exploiting the labor, right? And those businesses eventually fail. But if you like the ethical businesses who treat people and who have like ethical practices like the fair treatment to everyone, and people have been taken care of, environment is given a concern and environment is taken care of, right? They actually help the community. They do corporate social responsibility, the CSR projects. They do the charity projects, right? They treat their customers well, right? And there are like decent businesses. These decent businesses are the ones who survive in the long run, right? So we need businesses to be ethical. We need businesses to have ethical background, ethical principles, how to treat people, how to talk to people in a decent manner, right? So these ethics, why ethical businesses are important, right? They are going to survive in long run. They are going to survive in long run. And the ethical businesses can make better sustainable profits. Sustainable profits. And company will have increased reputation. Increased reputation the businesses will have. Right? Easy to attract and retain good employees. Customer retention may be higher. Customer retention, loyalty will increase. Right? The goodwill increase and increased sales can happen. Like that, you have to write a couple of answers. So can you explain what is ethical businesses? So ethical businesses is about what is the business and how you run the business. Your business, basically the business and the way you manage the business, both should be ethical. It should not, disrespect. It should not harm, right, any other community or employees or stakeholders. So nature, right, it should not harm. So basically, if you are an ethical business, you have good set of policies, you have good set of ethical principles, right? You treat people in the equitable manner, right? And you don't harm the environment. You always try to protect the environment, right? There are very good businesses like that who run their businesses in an ethical manner, right? Even in Sri Lankan context, there are a lot of businesses who are ethical. If you take Dilma, ethical business. They do a lot of CSR projects. If you take John Keel's, which is an ethical business, they do a lot to run the business in an ethical manner, right? Unethical businesses are trying to do some illegal stuff, try to make short-term money, try to scam people, try to exploit people, try to damage the environment, like that. So, right? Yeah, very good, very good. Another one has mentioned that it reduces unnecessary cost. Right, good. Okay, Right, 1.19. See, list two examples for general accounting software. Right? Now, this accounting software can be, that is your last lesson. Accounting software can be divided into two as the general accounting software and the specialized accounting software. Specialized accounting software are these payroll systems and maybe the procurement systems which are customized for your requirement, right? Maybe an attendance system, maybe an fixed asset register customized for your business, right? Like that, the customer, or what we say, the tailor-made ones are what we call the specialized softwares. General softwares you can apply for any business, right? Those are what we call like ready-made. දැන් ඔය limit එකෙන් ගිහිල්ලා ඇඳුමක් ගන්නකොට ඒ හැමෝටම ඕන කෙනෙක්ට ගිහිල්ලා ඉවරලා ගන්න පුළුවන් ඒක ready-made එකක් නේ. ටේලර් කෙනෙක්ට ගාවත් ඔයාට ඕන විදිහටනේ හදන්නේ. ඒක තමයි ඔය software වලත් තියෙන වෙනස. General software කියලා කියන්නේ නිකන් අපි කඩෙන් ගිහිල්ලා ගන්නවා software එක. ඔයාට හදලා නැහැ. නමුත් හැම කෙනෙක්ටම ගන්න පුළුවන් විදිහට හදලා තියෙනවා. tailor made කියලා කියන්නේ ඔයාට ඕන විදිහට හදා ගන්න. Right? So the general softwares are the what is it? The ready-made softwares. You know, the examples are ACPAC, then Myobi, Sage, QuickBooks, Tally, Peachtree, right? So like that, you need to write only two. These are the accounting packages which are available. Okay. This is something running the business in a legal way. Hamna is asking about ethical business. It's not only legal, you know, not all the ethical principles are legalized. You know, how you treat the customers, how you treat the nature, and not everything is legalized. No, law is the fundamental thing, but ethical businesses are going beyond the law, and they have set of principles. You know, law is the fundamental, but they are going beyond on how to treat people, how to serve people, how to take care of the community, how to take care of the environment. They put their own policies and they stand out among the rest because of their good business practices. Am I clear, Hamna, now? Okay? Yes, right. Please, you need to remember 2 or 3 softwares. Huh? I have a feeling that this can be tested. Good. Right. Super. Okay, we have come to the last question under the MCQ setup. Right. The following information was extracted from the books of sign-up traders for the month of March 2023. Using the information below, calculated the opening debtor balance. You are supposed to calculate the opening debtor balance. Right. Total sales 1 million. Out of total sales, 25% are cash sales. You know, then if 25% are cash sales, 75% is credit sales. Okay. Cash received from the debtor 800,000. Bad debt written off. Sales returns. Discount received. Debtor balance at the end of the year. Right? We have like several items. So you need to prepare the debtors control account. Put these transactions and get the answer. Okay? Right. Now let's work out. Let's work out. Right. I have to. Shall I work out here? Is it okay? Right. Let me take a different color then. Let me take black color. Right. Right. Let's prepare the debtors control account. Okay. Now you are supposed to calculate the opening balance. That you don't know. Opening balance එක දන්නේ නැහැ. Right. Other information we have to put. Right. First one, total sales. Cash sales are not going to the debtors account. Only the credit sales. How much is the credit sales? 25% are cash sales. 75% is credit sales. That is 750,000. What is the double entry for the credit sales? Debtor, when you are making a credit sale, debtor goes up. Debited to debtor, credited to sales. Debited to debtor, credited to sales. So, sorry, debited to debtor 700,000 as sales. 700,000 as sales. Okay? Right.
Excuse me, sir.
Yes, Pudha.
I didn't get it.
This one, 750,000, sorry, 750,000. So, let me explain it again. Right, sorry, I'm going to put that as 700,000. Right, okay, now look here. In this question, they are asking the opening debtor balance. That is the debtor balance, debtors control account opening balance at the beginning. They have given some information relevant to the sales and other stuff. What they're saying is during the year, the total sales is 1 million. Total sales consist of both cash sales and the credit sales, right? And the information says out of the total sales, 25% are cash sales. Then the remaining 75% is credit sales. So out of 1 million, 25% is 250,000 cash sales. 75%, 750,000 is a credit sale. Credit sales are creating debtors. What is the double entry for credit sale? When you are making a sale on credit, you are creating a debtor. Debtor goes up, debited to debtor, and sales income will increase, credited to sales. That transaction we have recorded, debited to debtor. Debtor's account will be debited 750,000 as sales, right? Okay, look at the second one, cash received from the debtor. When you are receiving cash from the debtor, debtor balance will come down. When you are receiving the cash from the debtor, debited to cash, credited to debtor. So we'll record the credited to debtor as cash. Debtor balance will come down, credited to debtor. Okay, right. Bad debt written off. You know the bad debt, when the debtor has gone bankrupt, you need to take the loss. You are going to reduce the debtor balance. Debited to bad debt expense, your loss, and the debtor balance will come down. So the debtor balance will come down, credited to debtor as bad debt. දෙවා සේල් එකක් කරා එන්න නැත්නම් ඉතින් අඩු කරන්න දෙපේ. right? Debtor balance එක credit වෙනවා. Okay? Good. Right. Sales returns. Sales returns. 100,000. When you are making the sales, your debtor balance will go up. When the customers are returning the sales, debtor balance would come down. Debited to sales return, credited to debtor. Credited to debtor. So the debtor balance will be credited due to sales return. Sales return. Okay. Right. Discount received 25,000. What do you think? Discount received 25,000. Is it applicable for debtor? For debtor, is it discount received or discounts given? What do you think? Discount received debtor, another make it. Do we need to take discount received? Yes or no? What do you think? Discount received?
No.
Yes, very good. We are receiving the discount from the creditors. We are giving discount to the debtors. So this is given just to mess it up. Then debtor balance at the end of the year. All right. Now we know that, okay, debtor is an asset, no? Whatever your closing balance will become an opening balance as an asset. So next year opening balance, which will be the last year closing balance. What they say is the closing balance at the is 300,000. ඒක තමයි next year opening balance එකක් වෙන්නේ. Right? That is how it works. Right. Now we have everything. මේ side එක ඔක්කොම දාගත්තා. මේ පැත්තෙන් එන එක මේක sale එක විතරයි. Now we can find the missing piece. Right? You can use the calculator and you can find the missing information. 800 plus 50 plus 100 plus 300 minus 750. 500,000. I think Kavinga got the answer. Right? 500,000, right? Right, very good.
Yes.
Yes, right, very good, very good. So is it okay to write those values without last 3 zeros in the exam? Right. Now, my good question, right? This is my suggestion for you. If they have given the information in rupees, do the question in rupees. If you are using thousands, clearly mention it. උඩින් දාන්න rupees 1000 කියලා. මම නම් කියන්නේ යාලා rupees දුන්නොත් අපි rupees කරන්න ඕනේ. යාලා 1000 දුන්නොත් අපි thousands කරන්න ඕනේ. If it is easy for you, that's okay, but you have to mention it. එහෙම නැති වුණොත් ඕක ප්‍රශ්නයක් වෙනවා. Okay, good. Right. Okay, right. So, yeah, the time being, yeah, it's 9:04 and we have completed the MCQs. I think our time is over. Sorry that initially it took like 5 minutes or 5 to 6 minutes for us to figure whatever the technical glitches, but eventually we came back and we had a good theoretical explanation, included MCQ discussion, right? And next week also we are having the class and I'll be completing the paper by next week because we have set of questions. There's a question on trial balance. Then there's a question on this one is on the manufacturing accounts, like that. Exactly exam set of paper I have created for you all, right? So don't worry, we are going to do this in the next week. If you can do the paper, that will be pretty easier for me, right? And you all can always ask your friends to join the WhatsApp group and we'll be sharing the link. And my number is 0714884587, right? If you all can send me a feedback about today's session, I would be much happy and I'd be delighted to see your comments, whether was it any good and if there are any issues or concerns that even you can tell me, right? Yeah. And please stay with us in the WhatsApp group, not only for financial accounting subject, for all the other subjects, we'll be having the this kind of a guest paper discussion, right? ඒක ඇතුළේම අපි theory දේවලුත් ඒවත් කතා කරගෙන යමු. I think that will be much suitable because we are coming closer to the exam. And always remember JMC vLearning in your AAT1, even still you got 1 month, you all can purchase the packs and you all can get ready if you are not comfortable with whatever the learning so far. And you all can continue with AAT 2, 3 as well, right? And the video is available. Admin, is it in JMC vLearning YouTube channel low?
vLearning.
Yeah, at the JMC vLearning virtual learning YouTube channel, you can watch this video again and again. In the meantime, sir, by adding all credit, are we getting the opening balance? By adding the credit, you need to deduct the sale value hamna, you will be getting the answer. Thank you, Ginadi, for the comment and thank you. Right. Okay, I'm not taking that much of time from you all. Please feel free to send me a feedback and you got 1 month, right? So get the maximum support and we'll be there to help you as well. And I know some of my students who are in Gampaha branch are also here today. I'm happy to see them here. So stay safe and we'll be meeting next week Monday to discuss the remaining part. So till then, good night and please do your studies. I wish everyone to get 4 A passes, right? Okay, so keep in touch, right? We'll see you next week. Okay, thank you.
Thank you,
See you,
sir.
sir. Good night.